sticking in China, Caterpillar's fourth quarter profits came in lower than expected due to lower sales in the Asia Pacific region because of lower demand in China. The phrase bellwether stock gets thrown around here and there, and I sort of feel like bellwether stocks are not applicable across the board when it comes to investing. I feel like they are situational. And in the case of the category of global trade, I feel like Caterpillar is absolutely a bellwether stock. And this has got to be a little concerning.
Yeah, that's true. And I tend to be a little bit more lenient on Caterpillar than I do NVIDIA for exactly that reason. When you do have a stock that is so correlated to global growth, like a bellwether stock is, I think it takes a lot of economic slowdown to kind of see the results that we're seeing with Caterpillar. And I'll just classify this again by saying, yes, there's an economic slowdown in China, but the revenues are still up 11% than they were last year. So it's not like we're looking at, a global economic slowdown that's going to, cast the end for all of these kind of manufacturing companies. So Caterpillar, while it is a proxy in a sense, it still gets more than half of its revenue from U.S.-based operations. So it's important to look at China and see the economic slowdown there and see the impact it's going to have, but also caveat that a little bit with, the natural tendencies and changes that we see both domestically and globally.
Yeah, I'm glad you pointed that out, because once I started to dig into the numbers a little bit with Caterpillar, I went in thinking, God, how big was this miss? How bad was the profit? It's like, no, revenue was up year over year. Profits were up year over year. This is one of those stocks that appears to be pretty cheap on a valuation basis right now, but I can't say I'm itching to go out and pick up some shares. Even though shares of Caterpillar are 10% cheaper today than they were last week, I'm not itching to throw some money at this.
Yeah, as a growth investor, I can't say that I spend a lot of my time thinking about the perfect price point to get in on a lower growth company. And I agree that they are cheap now in comparison to how they've been in the past, but we're also arguably at the later end of an economic cycle. And maybe that's just what we expect when we look at companies like this. I will say that I think the demand or the drop that we're seeing in the market today is just largely dependent on China, right? There's a lot of noise around China right now, and we see that lower demand in the Asia Pacific region, and it really freaks some people out.
It does. And the old cliche that the market hates a vacuum is absolutely true. And this is one of those situations where part of what we're seeing with the drop in the market is the fact that there's not a lot of news on Wall Street today. And what news there is, we've just talked about it. These are NVIDIA and Caterpillar. These are the two dominant stock stories of the day. Neither of them is good. And so maybe we're seeing sort of an overweighting placed on them in terms of the market drop. But later in the week, we've got Microsoft, Apple, Facebook, along with a host of other companies reporting, not Facebook, excuse me, Amazon reporting. So hopefully we'll see better news tomorrow.
Yeah, and this is the front end of going into, peak earnings season right now. The earnings that we've seen up to this point have largely been great. I mean, beating analyst expectation, a majority of them. So these being the first two of the week, I definitely think that, there's a little bit of investor psychology that's playing against them as well.